Kia ora, this is Mr. Wilson. This is a Level 2 analysis paper for the accounting, targeting the revision series for the external for Level 2 accounting. The first question that is important here is why is it actually important to do analysis? For a business owner, it's very important, and here are 5 reasons. I'd like you to get a book out and to write this down. Why is it important to do analysis? From an accountant's point of view, you're in a privileged position where you're able to see 10, 20, 30, maybe 200, 300 businesses a year. So you get to see what works and doesn't work and can provide some really good advice to people who are your clients to help them be successful in the business they're in. So some really key important points for them. Number one is their business growing? So that's revenue growth. We find that out by doing some analysis, and that analysis is things like percentage change in the income, also looking at maximising their markup without sacrificing their sales growth. So if you can write that in. Second thing that's important for a business is making a profit. And we make a profit by firstly maximising our sales growth, by secondly that markup's pretty important too. Secondly, controlling our expenses through increasing that gross profit percentage, but also controlling individual expense categories. So press pause and make sure you get these written down if you're not keeping up. Third thing that's important is maximising the return on investments. There are 2 major investments that we have a look at, and they look at the efficiency that we're able to create our profit. So we're looking at a return on our average equity, that's the investment from the owner, and the return, that's the net profit divided by our average assets, and that's how effectively or efficiently our assets have been creating our profit for us. What's also important for an owner is to reduce their own risk. So we've done these in level 1 and 2, so you should be quite good at these now. So we've got the liquid ratio and the current ratio. That's the immediate term, liquid, and current short term, our current ratio. And then our equity ratio, ability to borrow money. And lastly, we've got to create great cash flow strategies. And that's through looking at inventory turnover and age of accounts receivable, getting that cash in quickly so we can pay our debts. In the exam, the examiner is looking for 3 things. So when we're going for there are 3 questions in each exam, and you'll get a mark from N0 through to E8 on them. To get an A3, basically you need to have 2 descriptions, 2 answers that describe. A4 is normally 3 descriptions. M5, we've got to have all our descriptions and a couple of explanations. M6, we need 3 explanations. E7, at least 1 justification. And E8, 2 justifications. So that's how the examiner will mark your script. Alright, moving on. So we're going to go into our revenue growth. Now, revenue growth is very important. We like to see that our business is growing, we're increasing our income. So I've got a business here called Shea Shoes, and what I'd like you to do is put the heading number 1, revenue growth, and write that formula in. The formula for revenue growth is the change over the original times 100. So for Shea Shoes, the change from 2020 to 2021 is they've decreased their income by 20,000. So that's the change divided by the original. That's the 2020 figure. 20,000 over 120,000 times 100. So what that means for us is that in 2021, this is what you'll write, Shea Shoes decreased sales by 16.7%. Note it's to 1 decimal place. Normally that's what the examiner is looking for. And then we write a reason. So it could be that there's been increased competition. I really like the word by, that's BY, because it means that you're going to those merit grades. You're explaining. So increased competition, by having increased competition, you repeat yourself. Sales decreased as customers went to other stores. Alright, and then probably at the end you'd say decreasing revenue growth. For 2022, do that calculation, so the change, 40,000 over the original 100,000. times 100. So how we write it in 2022, the name of the business, Shea Shoes, increased sales by 40%. And a reason might be they have got better advertising. So better advertising by keyword, because it gets you those merit grades. By better advertising, more customers heard about the shoes, therefore increasing sales. Great. All right, so hopefully you're good with that. We're going to move on to the really important part now of markup percentage. So write these down, particularly that definition, markup percentage, the first sentence, really key. I'll read it out. The percentage added to the cost price to gain the sales price on average. Can you read that out? Great. We'll look at the average later. So basically we've got a gap between our sales price here and our cost price here. And we want that gap to be as large as possible because this middle bit is our gross profit. And so if our gross profit is large, it means that we've got more money to spend on expenses and most importantly, our profit for the year. So we've got to increase that gap. We can do that by increasing our sales price or reducing our cost price. But what we're trying to do is increase that gap as much as we can. The higher the better, so as long as it doesn't decrease our sales total, as it means more money is left over to pay expenses and increase profit. We just talked about that. So calculation, again, write that calculation down. And we're going to do that. I'd like you to check the calculations. So the calculation is the gross profit divided by the cost of goods sold. Get your calculator out, press pause, and I'd like you to calculate. So 55 over 65 is that for you 84.6. And do that for 2021 and 2022. Press pause, do the calculation, make sure you get the right answer. Alright, great, welcome back. Now we'll do the meaning of it. So the meaning, this is how you write it. In 2021, for every dollar of cost of inventory, Shea Shoes adds $1.08 to obtain the sales price on average. So if it cost them $1, they'd sell it for $2.08. All right. Sorry about that interruption. So how the possible reason for the trend? So the increased sales. So if we increase the sales price, for example, it creates a bigger gap. And you can see that's probably the case here. See, sales have gone down. Customers didn't like that we increased the sales price, so our sales have decreased, but our markup has actually increased from 84 to 108. In 2022, just what does that 75 cents mean? Or 75% in 2022, for every dollar of cost, Shea Shoe adds 25 cents to obtain the sales price, again on average. And what they may have done there is they may have reordered more frequently. So by reordering more frequently, the freight cost will increase, increasing cost of goods sold, decreasing the markup percentage. So here's our sales price, here's our cost price, and by an increase in costs, that's gone up. There may have been all sorts of good reasons for that, but it's worked for us because the sales have increased, and you may have seen that the gross profits increased as well. So how do we improve the markup percentage? So the first thing we could do, we just talked about that, we can increase our gross profit, our sales price there. So because we're increasing that sales price, the markup percentage increases. The other thing is we can focus on decreasing our cost price. So by doing that, we're decreasing our cost price, getting a bigger markup in here. All right, and so I want to show you how that works and why it's so important. So this one here I've got in a spreadsheet, and I'll double click on that so you can see the spreadsheet. So if I increase the sales price by 10%, I want you to focus on this bottom number here, the profit. So this is that increasing gap. So if I increase that by 10%, I'm adding 14,000 onto that. So instead of 140,000, it'll be 154,000. So what's the profit for the year increase? Just by a 10% increase in our price. So by increasing it by 10%, we've got we've got a 14,000 increase in profit. So it's had more than a 10% increase in profit. So one way of improving it. Let's have a look at what happens if we can decrease our cost price by 10%. So instead of 80,000, we'll take 8,000 off, and we'll make that 72,000. And again, watch this profit figure as I press enter. Instead of a 20,000, that goes up to 28,000. So again, a much bigger jump in profit than the small 10% decrease we had in our cost of goods sold. So if we can try and do both, increase our sales price to 154,000 and decrease our cost to 72,000, we've more than doubled our profit by making a 10% change to our sales price and a 10% change to our cost price. So that's why it's so important. Small change in our markup has a massive change in our profit. The other thing we can do is we can sell more items with a higher markup. So we'll show you how that works as well. So I want you to imagine that we're a burger bar, your favourite one, whoever they are, and we're selling burgers, fries and soft drink. Very much like the 2019 exam paper where we're down in Nelson and we're looking at the movie theatre. People come into your burger place to buy the burger. They don't go in there to buy fries and soft drink normally. So what we do is we normally have a smaller markup on the burgers. That will get them into the shop. So you can see our markup here, 43%. You can calculate that. $1.20 over $2.80 gives us a 43% markup here. But our fries, if you think about what the fries are, all they are is the little fry chip put in the deep fryer and put into some sort of packaging. And so the fries, we can sell them for $1.50, but it might only cost us 20 cents to make, considering the cost of the fries, and you can see the cost of perhaps the packaging. So we can have a much, much larger markup on that. The soft drink itself, been into a burger place, and what it is water coming through with air-rated bubbles plus the syrup. So it doesn't cost them a lot for that. And then the container. So it might only cost them 15 cents to create that drink, but they can sell it to you for $2. So their markup on their drink is massive. So what they're trying to do is lure you into the shop to sell you the burgers in order to get the fries and soft drinks as well, because they've got the higher markup. And overall, if we add them all together, we're not making a 43% markup, much, much higher markup. So here's just some questions I'd like you to consider. Why is it that markup's so different? All right, and it's because these cost us so much and customers are willing to pay more. What would happen to the average markup if they just started buying burgers without the others? So we'd see a decrease in markup. Why would they sell burgers at all? All right, you can answer that question. And then lastly, why are the combos so perfect for this? And again, in that 2019 exam, it had it around this, because by selling combos, you actually sell more fries and soft drink with a higher markup. So even though we may sacrifice a little bit of money, we may sell, what have we got, $7.50. If we sold the combo for $6, we end up selling lots of fries and soft drink. So because they've got the high markups, combos are really good to increase that. And the last slide for you to look on this one is recommendations. So how can we increase markup? Increase sales price, finding a cheaper supplier, buying in bulk and changing the sales mix. Note that I've got the word here, buy. And the last thing you want in here is will increase the markup, So press pause and read through those ones. All right, just to finish this one off, I've got a Kahoot for you. And for the Kahoot, there are a few questions here. I'll put the link alongside this video. If you can do the Kahoot, do it more than once. What I'm really after is you to get more than 9,000 points in it. So if you get the 9,000 points, then move off. So congratulations on that one. Our next session is session 2 on controlling expenses. Be a little bit shorter. Thanks for joining me. Hope that helped with your revision.